All right, so good afternoon, everyone. Welcome to our session for today about cybersecurity insurance. And we have here our speakers, Abbas Haidar um, and Andrea. We had Dinis Cruz. Also with them are Andre Ferreira. And that's it. So over to you, Abbas and Andrew.
Okay. All right. Good evening, everyone. Thanks for joining us tonight on this evening. I meant on this series of cyber insurance sessions. As you know, some of you know, we had a session early in the year in the last Open Security Summit where we discussed it was like a very light approach, very light discussion about cyber insurance and what are like the worries of people trying to get cyber insurance, what are like and what's scaring some companies from getting cyber insurance, what are the things that we need to look when probably get a cyber insurance. But we were only, it was only a light conversation, and tonight hopefully we're going to touch down into a deeper approach. And tonight on the call we have Andy, who's the SVP. Andy, I'll let you introduce yourself.
Sure. So yeah, Andy Lee. I'm currently at Vantage Risk Companies, although I'm representing my own views on this call, not those of Vantage. I just need to say that. I've been in the cyber insurance industry for over 20 years as an underwriter. So I'm the one at companies accepting cyber risk or not, and pricing it and presenting the policy terms. I've worked at AIG and a U.S. company called CNA. And now at an actual Bermuda startup, although I'm still in the United States.
Okay, Dinis, do you want to introduce yourself? Or?
Yeah. So I'm also speaking on personal sort of views. This one, especially because it's a hot topic. I'm the chief scientist of a UK company called Glasswall, making files safe, and I'm also the CISO of Holland & Barrett, which is a large UK retailer with 600 stores around the UK and Europe, and again, cyber insurance is a topic I've been quite passionate for a while, and I'm very looking forward to our conversation today.
Cool. And my name is Abbas Haidar. I am the CISO of Alipay UK, which is a part of the big Alibaba group and I am the SecOps manager for WildFirst. Tonight I'm only presenting myself, not presenting the company I work for. And I was looking into cyber insurance. We are looking into cyber insurance for next year. So for me, it's a subject that I'm not an expert at. So, and I wanted to have some deeper look into and some digging into what cyber insurance is. What do you need to look at when you buy cyber insurance? So I'm just going to go to the next slide. And I just want to say quickly. So cyber insurance, usually, I just want to bring some facts. You have cyber insurance, which helps you to cover the financial losses that might result if you have a cyber event and an incident. And I just want to say, these are some stats, and that's, probably just the why do you need to get cyber insurance. So I'm not going to go into deep details here, but I mean, as we know, end users can be caught off guard, tricked by phishing email. That happens a lot. Cyber breaches, can use a lot of damage to your business in terms of finance. Threat actors, I'm getting cleverer and stuff like that. But I mean, we already discussed this last time. Why do businesses need cyber insurance? I mean, and we went into some details. I mean, how to cover it. So I'm not going to go through this. But I mean, tonight I chose a couple of questions, and please, like Andy and Dennis. So I'm going to pose some questions here.
Abbas, let me just prefix this, because we probably, some of the things we're going to say is a bit harsh on the industry, right? Like, just my view is that cyber insurance will play, and we need cyber insurance to play a massive role in the cybersecurity market, right? In fact, the fact that we today don't have a very healthy and mature and pragmatic cybersecurity workflows is a sign of immaturity of our industry, because we can't measure things. But I think cyber insurance is one of those industries, because it's so data driven, because it's so driven to try to make and to quantify risk decisions. I think when we get it right, it's going to push a huge amount of security. And I also will allow a lot of risk-based decisions to be made where companies can consciously decide where to invest, where not to invest. But I also feel that there's an element of the more public some of the information is, the more the external actors can make decisions. So for example, like if I know some of the cyber insurance, and if I get good data from the cyber insurance of my suppliers, then I get a very good sense of how risky those suppliers are. So we kind of need the next generation of cyber insurance companies, which they're starting to appear. And I was trying to say that I think there's a huge market here. I think there's a great opportunity. So we're going to probably be bashing a little bit the industry today, but I want to say that I feel that it's not because we don't think it should exist. It's just because we actually need it to be working very, very effectively. So go on. I just want to add that caveat.
Okay, so I just say it like, I don't know if you agree with me, Andy and Dinis. It's just like when you are doing a compliance, let's say security compliance certificate for your company. The thing some companies get wrong, they just want to get it, and without looking into it. We'll go into details with Andy and you, Dinis, later on. But I mean, if you buy a cyber insurance policy to raise your security, well, I think it will help you a lot. So it's like when you're doing a compliance. So that's something we are not getting. I just want to go, quickly, because I want to get to the core of this conversation. So I just want to quickly describe a couple of things and how do you choose your cyber insurance policy from my side, and after that we'll get into Andy's and in Dinis' opinion. So I just want to say, when you want to choose your cyber insurance, so what do you need? How do you choose your cyber insurance? So you just need to, as you need to have your products, to be honest. So that's for a start, and what kind of security controls you have in place, and you need to understand what you are signing for. I'm not going to go into details here. I will let you guys comment, but these are just like brief things I worked on earlier this week. So and do you really understand, do we really, what we need to ask ourselves, do we really understand what is the potential of a cyber incident if it happens within, it affects one of your products or one of your system? So do we know what the damage is? And other questions are like, what does a cyber insurance policy cover, and what cyber services are included or excluded? So what I figured out that there are some companies that include some stuff when you are like, if you have a cyber incident, like cyber event. So they include there are a couple of things which are included, couple of things that are not included, and people just go and buy policies. Yeah. So, and does the policy include support during or after a cybersecurity incident? What kind of support? Some of them, let's offer you like forensic stuff, and what must be in place to claim against your cyber insurance policy. So these are the generic ones that everyone should look at. But when I listened, probably when we talked to Andy, it's probably, if I want to find a cyber insurance, if I want to go and choose one, what do I need to look at first? I recall from our last conversation, it was like, first find a good broker. Is this a good start?
Yeah, it's absolutely critical if you're purchasing actually any kind of insurance for a business to find a very good broker, because the way that this works, all commercial insurance works, is that there are insurance companies, of which I am an underwriter at one. We do all of our business with brokers, right? So we don't go directly to buyers, we go to brokers. We do a lot of different deals with brokers. The primary responsibility of a broker is to look after the buyer's interests. So, and that includes presenting the risk in the best possible way to people like me, the underwriter. So if you don't have a broker that understands cyber insurance or understands your company, already you're off to a bad start. So it's one of the most critical items, is to find a really good broker. The biggest brokers in the world are Aon, Marsh, Willis. They're all over Europe. They're locked in a big broker as well. There's tons of really good brokers. Cyber insurance is getting a ton of attention. in the insurance world. So there's plenty of very good brokers out there, and there are plenty of experienced carriers or underwriters out there as well.
And Andy, like in the last couple of years, there's definitely been a normalization of the market, right? Because in the beginning, there was lots of deals that were made and people didn't fully understand the risks. But given the recent payouts, actually you get the point where aren't the insurers even much more cautious now to provide deals?
So I can give you a little bit of a very brief overview of cyber insurance, and I'll speed up to the last few years. But cyber insurance has really been around for the last 20 or 25 years. It really grew out of professional liability policies that were being offered to technology companies that were had to have E&O, errors and omissions, or professional liability insurance if they got sued by their customers for screwing up, right? So insurance companies started adding on coverages for data breach and some other cyber-related perils. It then grew out into the cyber insurance industry, which has really been the last 15 years, growing pretty significantly. Before, about 3 or 4 years ago, it was extraordinarily profitable. There weren't a lot of losses on the cyber insurance side. I think the threat actors just weren't up and running in any kind of with any kind of scale to really impact insurance carriers. So everyone sort of got maybe not paying as much attention to the underlying exposure as they should have been, and the change in the underlying exposures that were taking place with threat actors really gearing up and scaling up in a massive way. So at about the end of 2019 through 2020, 2021, the insurance industry got hit hard, very hard, by ransomware claims. Mostly, there's traditional data breach, business interruption claims, other claims as well. But the massive losses over 2019, 2020, 2021 were from ransomware and ransomware gangs infiltrating networks, encrypting, ransoming, and causing all sorts of losses. So in response to that, underwriters got much more conservative, for sure, increased prices massively, reduced the amount of insurance that they were offering, also reduced the amount of coverage they were giving, and increased the amount of risk that the insured had to take on themselves in the form of a deductible or a retention before you get to the insurance. So 2021 was hugely disrupted for insurance buyers, massively disrupted for insurance buyers, with rates going up 100%, 200%, retentions or deductibles going up 100%, 200%. The amount of limit or capacity, if you had 10 million in capacity, maybe you could only buy 5 million as an example. Going forward, it was very difficult for insureds and for brokers, and quite frankly for underwriters too, who were seeing all these losses come through from ransomware claims. So it was a huge learning experience, I think, for everybody. So you have the underwriters learning how to getting much better at assessing risk and understanding the underlying exposures and what defenses should be in place to properly protect insureds from ransomware claims and other claims. You have brokers who were realizing that what underwriters needed and what insured should be doing. There should be an alignment there in helping those two other, the buyers and the insurance underwriters understand what needs to be in place to be insurable and to be a good risk. Things have here in 2022 have stabilized. So rates are not going up 100%, 200% anymore. Retentions aren't going up a ton. It's much easier this year to get cyber insurance than it was last year. I'm at a startup carrier, so I've brought, my company has brought capacity, capital to the insurance marketplace, and we're not the only ones. So there has been a leveling of the cyber insurance market in 2022. So,
but that's a sign of maturity, right? In a way, that course correction means that before, like companies were not really measuring risk effectively, right? They were not really measuring the risk posture, which is why they got hit quite badly.
Yeah, there was yeah, it is a sign of maturity, and I think insurance underwriters certainly have learned a lot more about basic cybersecurity hygiene. So about MFA and EDR and privilege access management and what a good backup looks like and all sorts of things that they were aware of, but maybe didn't know in much detail prior to ransomware really taking off. So and the same for brokers. I think they're all brokers and underwriters are much more sophisticated in understanding basic cybersecurity postures than they were previously. So it has been an evolution. I think it's still going to evolve, but the industry's in a much better place than it was 3 years ago.
Well, and I think the questions of how do we measure security, how do we define, what should happen, what should be in place, and what's the claims about, those are all amazing questions, right? To finally be asking.
Yeah. I mean, and there's a whole ecosystem growing up around all of these issues, right? Insurance is just one part of it. So there's third-party risk assessment tools. There's companies that are out there just trying to measure people's cybersecurity risk. Whether it's a company like yours wants to understand what their vendor's cybersecurity risk is, or an underwriter like myself wanting to understand, if you're coming to buy, what your cybersecurity risk is. That there was some of that stuff going on 5 years ago, but it's moved significantly in the last 5 years. So, and then incident responders and all that, but we can get into that. There's a huge ecosystem.
Right, Abbas, take us to the next stage.
I mean, I just have a quick question to Andy in terms of maturity level. When you are as a policy underwriter, when you are you have someone probably doing the risk assessment for one of your potential clients, but I mean, does that compliance, let's say a SOC 2 or ISO 27001, does that give a higher maturity level when you're looking at cyber risk? When you are trying to do a policy, write a policy.
Yeah, I mean, so one of the things about cyber insurance is there's no standardization. So there are some areas of insurance where there's a lot of standardization in terms of what underwriters should be looking at and what makes a very good risk. Some companies are looking at SOC 2 reports and some probably aren't. Some are paying more attention to the third-party risk assessments. I mean, having a good SOC 2 report is very helpful. I think the issue there becomes not everyone has one, and so underwriters aren't focusing specifically on that. They're looking for information that they can get on every single risk and have a more standard way of looking at risks than reports that may or may not show up. A lot of times companies won't provide those reports as well, which is an issue. But in general, it should be a huge help. Yeah, that you can show and document. Yeah.
And I'm sorry, just another question. I mean, it's just about when you choose the policy and you start, writing, you start writing the policy. Myself as a consumer, as a third party who's buying a policy from you, I heard a lot because myself, I haven't bought a cyber insurance before, but I am planning to for the next year. So what I don't want to say it this way, but when I buy car insurance, as an example, I'm always careful about, choosing this tick box, choosing that tick box. Did I miss on this? Did I miss on that? And one of the things that just came to my mind, because I was discussing this with someone else before as well, and it is that some companies, some policies do not cover, let's say, an attack, a phishing attack. So so some end user clicked on a link and they got compromised, and they had an issue and they had a security breach. So are there any generic generic guideline that we should follow when we choose our cyber insurance policy?
Yeah, I mean, I say going back to getting a good broker, it's really the broker's responsibility to present different quotes and present the differences in those quotes. So it's not really up to the buyer necessarily to figure all of that out themselves for a commercial buyer like you would if you were yourself buying car insurance, because it is very complex. I would say that, again, a good broker is going to understand who the market leaders are, and who has the best coverage. I hear a lot of different weird claims that weren't covered. There's usually something else going on in those claims, like the insured lied on their application or something like that. That the insurance companies is saying, hey, you flat out lied to us, so we're not paying that claim. And for instance, like a phishing exercise, if the insured represented that they have a cybersecurity employee training, yes, we do a lot of training. We do a lot of security training, and that's what we've put on our application. That's what we've told the underwriters. That's what we've represented to buy this insurance. And then a phishing claim comes in, and the forensics guys go in there and say, oh yeah, somebody clicked on the link, and then it's like, okay, well, weren't you doing training? And the company goes, no, actually, we weren't doing any training. The insurance company is going to say, well, you lied to us. we're not covering that. So there's all sorts of weird claims like that, but in general, phishing a phishing attack's covered. I don't know of any company that would just say we're not covering phishing attacks.
Okay.
So, but there are a lot of differences in the policy language out there, a lot. So it is very critical. And if anyone takes one thing away from this discussion today, it's to get a good broker.
Okay.
So.
Can you bring Petra in, Abbas?
Yes, that's what I was just about to say. So Petra, I don't know if you can unmute yourself.
Yes, you can.
I can. Hello. So I wanted to ask you a similar question to Abbas asked, is basically how much do you look into GDPR? Like, first of all, how much do you cover for GDPR, fines? And then how much do you actually look into the compliance? Because, we are all in Europe supposed to be compliant with GDPR, but, some companies are more compliant than others. So I'm just wondering, how much do you look into it? How much do you assess it? And how much do you cover it? Because some of the GDPR fines can be astronomical.
Yeah. So first of all, regulatory fines and penalties are covered by the insurance market. So it is a standard coverage part when you buy a cyber policy that for privacy breaches, any regulatory issues and fines and penalties are covered. Underwriters will absolutely ask about a company's privacy protocols and procedures and how they are handling personal data, and if they are what measures they're taking to ensure compliance with GDPR. Now, it's we're not trying to absolutely ensure. We can't ensure that a company's doing every single thing to be in compliance with GDPR. That's part of why you buy insurance is something might have gotten missed. So, but those questions are absolutely being asked. We're looking for chief privacy officers and a whole mechanism to ensure compliance with in Europe GDPR. There's similar laws in the United States, CCPA in California that's very similar to GDPR. So it's a huge issue.
Cool, thank you.
Yeah, I just have one additional question to that. We're talking about the phishing emails. So is it conditional that let's say you need to have a security awareness training program, you should be running this every 3 months, you need to show us an evidence? Do they need, let's say, the end client, do they need to show you an evidence that they did their security awareness?
So every insurance company is going to have an application for cyber insurance.
Okay.
And those questions get answered by somebody who signs an application. So one of those questions will be about cyber security awareness training for employees. And it might drill down more and say, how often do you do phishing awareness training? And you could probably click, annually, quarterly, or more often. If someone were to lie on that question or misrepresent what they were actually doing on that question, and a claim comes in, that's when it would become an issue.
And did that align, let's say, okay, So I have my business have the security policies. Yeah, so we do cyber awareness and stuff like that regularly every 2 months or every 3 months. I had someone who did not do their cybersecurity awareness. I logged it. I know they didn't do it. But that's covered in my security policies because it says you are supposed to do this and pass this this security awareness. If you don't do it, there are like consequences. So do you take into consideration what kind of security policies like the company has or has in place? Just in terms of if there is one employee who's like not careful, he did it on purpose for some reason.
Yeah, I mean, insurance is usually set up to not penalize a company for a bad actor, so long as that company is doing the right thing. That's not how insurance works generally. If the company itself or the representative of the company is misrepresenting what they're doing, that's a different story. But if there's a rogue employee that does something that they shouldn't have done, then that's not held against the company itself. And it's also, the bar is not 100% compliance on anything, right? It's that, and including phishing training, that every single employee in the company has to have passed their phishing training to get coverage. That's not how it works.
In a way, that's the point of insurance, right? The point of insurance is the premium should be based on the delta of what can go wrong, right? So if you do zero training, then the delta premium should be high. Training with 20% coverage per amount, if you feel that you at least can reach a good amount of people and you have good processes in place, then the premium should be less, right?
Right. Exactly.
I mean, do we have like another question, if you don't mind? And I'm just trying to have this as an open discussion because I just had a couple of questions, like, I did get ready before earlier this week. Just about, would it make it easier if a client come to you and say, listen, I've done my risk assessment. I've put I have my security controls in place, but my worry is about this component in particular. I wanna insure this component. Is this something possible?
Right now, that's not how the commercial insurance market is working. So it's coverage for the entity. We're covering. It gets very difficult to sort of pick and choose exposures for us. It could be time consuming. There could be a lot of issues around how to sort of set aside specific perils or exposures. So we're building portfolios of covering entities for their cyber risk, and that's how we're charging premium. It just becomes what is already kind of a cumbersome product, and would make it more cumbersome for underwriters to do that.
Yeah, but Andy, we talked about this, right? That's one of the direct, especially the more modern, I would say, insurance companies. They'll be able to do micro or mid-level insurance, right? Which is once the data gathering, data collection becomes optimized, then this is possible.
Maybe down the road. I mean, right now it's I'm not aware of carving out one specific item for coverage.
Okay.
I think, Abbas, this is the direction of travel, right? This is what we need, right? Because
yeah,
an organization, there will be different things, right? In a way, I would argue that the organization, global insurance, should be a combination of the units insurance, which should be a combination of the divisions insurance, right? Because in a way, that's when you actually start to reward good practice inside the company.
Yes, I agree. I think that was something I would like to have probably in the future. I don't really know if it is possible. As so far, it's not possible in the insurance, in the cyber or the general insurance world. It's just for me to come and say, these are my gaps here. I mean, I know that I have gaps here. I know this is very well protected. So can I insure my gaps?
It'd be worth exploring this, because are there companies now who start to get, for example, data feeds from Azure and AWS, and actually are already able, Google Cloud, and are actually able to provide insurance, for those specific environments?
Yeah, there are some things happening there. I think you're referencing Google has a program with Allianz and Munich Re where they're insuring their cloud environment. So that's the exception, not the rule at the moment. But
that's the
yeah.
beginning of what Abbas was saying, right? So if we can,
Yeah.
already, there's already going to be a massive difference between a cloud environment and a legacy system and SaaS platforms and all that
Yep.
stuff, right? And and
Yep.
IT and device computing, right? So if I could just ensure my new modern, cloud computing environment, then that should have a certain type of premium that is very different from, for example, a legacy estate or the end user computing estate, right? And also the type of threat, right? You shouldn't get a phishing attack on your cloud computing device, right? You have worse problem if that's the problem. But there's also other things that you're going to get hit with it, right?
Yeah. Yeah. I mean, I think underwriters are going to have to get more sophisticated to contemplate those different types of exposures, and we're going to need to get more sophisticated anyway. So that's a point of evolution potentially.
But the way to do that is with integrating directly with the cloud providers' data points, right? Then you can even have insurance, which is predetermined on certain things or certain scores to be set, right? It actually will be really good for security because then developers, because it gives them a benchmark, a place where they know they can't cross. Because suddenly there's a big financial implication.
Yeah.
Cool.
My next question, which comes always to my mind as well, when you do when you have your probably your risk assessment, a third party doing a risk assessment on a potential client, so which kind of risk assessment do they follow? They will follow a qualitative one or a quantitative one? My question, I'm asking this question, it leads me to another question, which I'm going to say quickly. Do you ever say to a broker or like a third party, a potential customer, like, listen, it's not worth insuring what you have? Your product, value probably is 2 million and it's going to cost you 3 million to do a cyber insurance on it a year.
Yeah. So again, that would probably be a conversation that a broker would have with a potential buyer. So, the way this would work is, a company goes to a broker and says, I want to procure, 3 million, 5 million. If you're a big company, 100 million, 200 million of insurance. They would have a company fill out an application of some company and assessing cyber defenses. And a broker might say, look, you don't have baseline cyber, a good baseline cybersecurity posture. You need to do X, Y, and Z before insurance companies will even look at you. So that's where those conversations would happen. What would happen on the broker side? It's say the broker says, okay, we can get you insurance. You're not the greatest risk, but we'll be able to get you insurance somewhere. They'll send it out to 20 different companies, right? And I might be one of the underwriters that say, hey, they don't have MFA across the entire environment. For remote access and for privileged access, we're not going to touch it, right? But that might just be me. And there might be another company out there that says, well, they have MFA for remote access. That's good enough. I'll do, I'll provide a quote. So, or whatever else they're looking at, right? So EDR or MDR or any of the other critical components of cyber defense posture. So it would be, there's not going to be one answer. The answer to you is, from an underwriting perspective, there's not going to be one answer. So, does that make sense?
It does make sense. I mean, my aim. I mean, we were discussing this with Dinis last time. What I would love to see, like, for myself as a consumer of a policy, I would love to see, like, to get to the point where I'm gonna say, if this is just my vision, so it might be wrong. So it's just something. It's a theory in my head as well. So when I look at risk, I'm gonna need to say probably at some point, this is how much gonna cost me in terms of insurance if I need to. If I want to keep this risk, or like if I don't mitigate this risk, or So I mean, this is something I would love to see. I think Dinis is on the same line with me here. So probably just to be able to assess your risk in a way that in the way it is in cyber insurance. How much can it cost me in cyber insurance?
Yeah, well, it's good. It's a very good data point, right? You know, for what we're doing to the business, right? You protect as much, and then you insure the rest, right? And then, but that's why it will be very valuable to be a direct correlation. And it starts to be, right. So you can now say my premium cost X without MFA is going to cost Y with MFA. That's a great thing, right? Because suddenly the business case to put MFA is not just the security benefits, and some of the usability, which of course they are got, but there's also a financial amount that you can say you actually saved from a business point of view. So Petra has a hand up again.
Oh yeah, Petra, please feel free to unmute yourself.
Hello again.
Hello.
So yeah, I just want to say I completely agree with Dinis and Abbas on this line. And I was just wondering, because I know that nowadays there's like a lot of quantitative risk assessment tools that will actually compare your situation in your company. And by compare, I mean, like, they will really analyze your situation by plugging in like cloud tools to show cloud vulnerabilities, for example, and they will compare that to the market, and then they will give you an accurate, like, well, I can't say accurate, but they will give you a good kind of qualitative risk assessment with actually, how much money you would lose if this risk gets exploited. So I'm wondering if you are starting to kind of, when you think about these policies, if you're starting to collaborate with, the companies that have these tools, and like, do you even, like, for example, if you would come to me and you'd be doing my policy and I'd say, okay, I have this risk, qualitative risk assessment, would you take that into consideration at all?
Yeah, so there's a few questions in there. So I'll try and take them one at a time. No worries. So insurance underwriters are absolutely using some quantitative assessment these days to analyze risk. The problem that we have with, and there's several tools, is that it's an outside in look only. So at my previous at a lot of different companies are using these tools. So the ones that are commonly used in the insurance industry, there's two that are insurance specific. One's called Cyence, CYENCE, which is now owned by a company called Guidewire, that does risk assessment on companies, again, collecting a lot of different data points, all outside in. So just what internet traffic and that they can look at and pinging systems. That tool, there's another tool called CyberCube, which is insurance specific. Both of those tools also do aggregation modeling on portfolios for underwriters, but that's a separate topic. The more general tools that are being used right now are security scorecard. So I use security scorecard now, and BitSight. So those two tools can be used by anybody to assess anybody's cybersecurity posture. So they're used for supply chain analysis, right, by non-insurance companies. Actually, that's where they started. Those companies, Security Scorecard and BitSight, were started so that any company can get that tool and start assessing their vendor risk, and then it bled over to insurance. So again, that's only an outside-in look. A lot of the more complete cyber risk assessments are going to have a lot of inside-out data, right? Whether that's data from information from the cybersecurity team, information from internal scans, things like that. Yeah, that information is great. We don't always get it, and if you have it and you want to provide it to underwriters, it can, and it's good information that can only help. The problem is there's no way for us just to like standardize that across different risks, because it's all different companies that are doing those assessments have different methodologies. We're not going to have the time to understand an Ernst & Young audit versus a Deloitte audit versus a KPMG audit versus somebody else's cybersecurity audit. So that's a limiting factor. We can take snippets of good information from those audits, but we can't different audits uniformly across our portfolio, which is what we're trying to do. Did that answer your question?
Yes. I suppose it does, but I was also trying to get at if you're aware that there is also like qualitative risk assessment companies that also do look at risk from inside out in a way that they, it's not just by getting information, but they plug into security tools, like, Security Hub from AWS, or like other security tools. And then based on that, they create this qualitative risk assessment and give you kind of like the penalties or fines that you, or like kind of, what damage you would incur if any of these are exploited. So I was wondering if you're aware of these and like how much you know that this kind of information gets used.
We are, I think as an industry, yes, I'm aware of them. I think as an industry, the industry is vaguely aware of them. So again, that's information that when a potential insurance buyer has that information, they're not always willing to provide that to insurance underwriters. But yeah, there are definitely lots of conversations that are starting to happen around that stuff in the insurance industry, but those conversations are only just beginning. So there are some companies that are trying to utilize, APIs or starting to see if it'll work to use APIs and security information in their underwriting process if they can get it from the insureds. So I mean, a lot of the issues that you guys bring up, insureds, if I'm looking at 1,000 different insureds, you guys might be at the 100 insureds that actually want to provide that information. So that's part of the issue that we deal with on the underwriting side, is not everybody wants to give out that information.
And how much, like, it's a good point you came up to, how much providing that information can be beneficial or detrimental for a company?
Yeah.
Like,
I have the question here, Petra, by the way.
Yeah, if it's good information, it's very helpful. If it's not good information, it's not going to help. It might hurt. So,
but isn't that something that eventually will be regulated, right? The same way the financial data was regulated. You could eventually have jurisdictions or countries or places where you have to provide that data to insurance.
Yeah. Yeah, if it's regulated like that, then it can be beneficial.
Yeah, that might happen in Europe before the United States. So different levels of regulatory frameworks in those two different jurisdictions.
Andy, we have a question from Ali. So are there any insurance companies you believe are doing in cyber insurance better than others in the field?
So I would say, one of the market leaders in Europe and the US is Beazley. So it's they've been around for a long time. I think some of the tools that they're using, they've been ahead of the curve on risk assessment. There are some other very strong companies, very strong insurance companies with very good cyber underwriting divisions like Chubb and AIG, AXA XL. These are all major global insurance companies that have good underwriting units for cyber. My company's brand new. I would say my company, but we're brand new. We need a few more years of underwriting under our belts. So Dennis alluded to sort of a new wave of cyber insurers, right? Which this is probably a good time to talk about it. There are insurtechs that have been getting up and running over the past few years. My company has a relationship with one of them and they add more value on smaller companies. So under $1 billion, maybe under 500 million in revenue, that's where they add more value than on a large multinational company that has lots of their own relationships with lots of different companies that help them manage cyber risk. So Coalition is one of them. Resilience is another one that just got up and running in the UK. Corvus is one that's in the US that just opened a German office. There's a company called AtBay, although I don't know there. It's actually most of the folks that started at AtBay came out of the Israeli army, and they're doing some interesting things. Although I'm not sure if they're just in the US or not. But there are these companies started off as technology companies that were doing or that want to do cyber insurance. And the way that works is they build their technology platforms and then they underwrite on behalf of another company, because to start an insurance company, you need a lot of money. So, for example, my company is a small insurance startup, and we started with 1.2 billion in equity capital. You get a cybersecurity company, and they start up with $20 million, right? It's a much different deal. So these companies like Coalition and others, they'll underwrite. Like Coalition's main partner is Swiss Re Insurance Company. AtBay's main partner is Munich Re Insurance Company. So they set up all the tools, they do all the underwriting, and then Munich Re will take on the risk. But they're doing some very interesting things from a risk assessment standpoint, qualitative analysis. They don't have kind of the legacy mindset and the legacy systems that old insurance companies have. So they're definitely doing some interesting things. Again, they add more value on for smaller companies. So companies, I would say under $1 billion in revenue is where I set the threshold. Over $1 billion, they don't need kind of the methodologies for the most part that those companies are bringing to market, but they're definitely pushing the rest of the market along in terms of more quantitative analysis of cyber exposure and incident response and real-time incident response and some other stuff that we haven't really had time to talk about today. But
I'm wary of the time, and I just have one generic question. So if a broker, I don't want to say walk in like to you because doesn't happen anymore. So if a broker contact you and say, well, my client, he wants to cyber insure his product, and so he had a guidewire risk assessment and it looks like so clean. Would that take the price down, knowing that I'm only talking about money here, where it is always about money, but just because the cyber insurance prices, they shooted, over the last year probably, or year plus.
So when I said the market has stabilized in 2022, I think now going into 2023, we're going to see a return to some competition between companies like my company with other insurance companies. You're going to see, and the competition's kind of stopped. It stopped for 24 months. There wasn't a lot of compete. Like people were just trying to figure out what was on their books and manage that and get off risks, and that's what was happening. So there wasn't a whole lot of competition for someone else's business. That's going to return in 2023. So you get a good, again, a broker will put together the best possible submission that they can with all the information that you'll give them. Say, hey, we have a SOC 2 report that's really good. We have we had a risk assessment done by this company that does qualitative and quantitative risk assessments that we can, and we're willing to provide it to underwriters. You'll get 4 or 5 companies that want to write your risk, and when you have competition, you'll get price relief. So you're going to see more competition in 2023, and that's gonna for good risks, that's going to provide better pricing from your perspective. I think what's going to happen in the market is that you're going to have those very, very good risks that are going to get good, and this is what should happen, get good insurance pricing, and then you're going to have those risks that still aren't doing what they should be doing. And underwriters are like savvy enough now to understand which companies aren't doing what they should be doing, and they either won't offer insurance or it'll be really expensive.
But I do think you need to carve out parts of the business, because I think most business these days, especially business who are doing digital transformation It's asymmetrical, so it's not the same across the board. Basically means the risk you're buying is not the same across the board. You almost
Yeah,
want to
I
get
mean-
to the point where you can give the risk to the business units that own that risk. The policy or the part of the policy that is expensive, right?
Yeah, I mean, that could be a whole workshop. That's a topic that could be that could be workshopped. So with multiple stakeholders to get a better handle on that.
There you go. I was February. Let's do that in February. Let's go.
I mean, that's what I was thinking about, just to talk about this next time. This is our next topic, hopefully next time. So I don't have any more questions. Any questions? I haven't checked the chat for the last.
No, this is great. Thanks, Andy, for sharing your knowledge.
Yeah.
To get people
Yeah,
from the
absolutely.
industry.
I'm happy to do it. I'm happy. I think also what would be useful is for you guys to talk to a broker. So
Yep.
if I can help you guys identify probably a UK broker who's going to know the UK market better than I do.
New broker, the finding the broker.
What's that?
The new broker, finding a broker.
Yeah. I'll help. I'll try and help. Exactly.
I need to reach out to you as well. I mean, I need a broker, but not here. It is in the Far East, so somewhere in Singapore.
Okay.
So, but I'll reach out to you on LinkedIn later on. So.
But yeah. I mean, all those companies that I mentioned are going to have people in Singapore. So.
Okay.
They're all global companies.
Brilliant, guys. Well, thanks. Another
you.
great session and moving the needle a little bit more on insurance. And thanks, Abbas, for organizing this. And I'll see you guys in the next one.
Thanks, everyone. Thanks,
Thank
Andy.
you.
Thanks, Dennis. Thanks,
You're
everyone.
welcome.
Cheers. Bye-bye.